Hey, we're live. Thank you so much for joining me. If it's 4:30, you know it's time for Be the Boss of Your Money. It's a show, a live stream show about personal finance, investing, and the things we all need to do to prepare for a happy financial future. So that's what the show's about. If you have any questions about personal finance, investing, any of the subject matter of today's show, please ask me in the comments. I love hearing from you. It's the best part of the show. Words of wisdom, words of encouragement are also always appreciated in the comments. And while you're watching, if you could give us a thumbs up or a heart or a wow or applause, whatever the reactions are, depending on whichever platform you're watching on. We stream to Twitter, we stream to Facebook, LinkedIn, and YouTube. So we are getting around, and I expect Instagram to be coming to you soon as well. So here we are. I'm Mitch. If you're just tuning in, big rally today. It's a kind of rally that I think we really needed because yesterday it seemed like investors were really giving up hope on whether or not we could see the stock market finally actually go up for a change. And it sure as heck went up a lot today. Things got a little bit too oversold. Let's thank the stock we talked about yesterday, Facebook slash Meta, or let's talk about Meta, the company that was formerly known as Facebook. Facebook knocked it out of the park today. It lifted the entire NASDAQ. It was a big sigh of relief. Facebook just reported more users, and that's like the ultimate metric that you could possibly have. The numbers were fantastic. Today, Amazon, Apple, Intel, and even Robinhood are all just out with numbers. We're going to go over those stocks after market trading as well and see how that's going to set us up for the last day of the week for tomorrow. So let's roll a quick intro. Let me pop my banner in here. We'll roll the intro, and then we're going to have a good show. Again, while you're watching this, or if you're watching in the replay, hit me up with any questions you have, words of wisdom, words of encouragement. If you want to share a story or something, that's, do it in the comments. That's the place to do it. And I love hearing from you. So here we go. No. Let me do that again. So here we go. Okay, we are back. We're back with a vengeance. It's Mitch Goldberg. You're just joining us now for Be the Boss of Your Money. Woo! Yeah. You could tell I'm just not getting enough sleep. I'm just not myself. And again, while you're watching this, just remember, wherever you love whatever your favorite platform is, okay, over here, Insta, YouTube. Yeah, I'm streaming to YouTube as well. LinkedIn, Facebook, Twitter. I'm everywhere. So and I don't always post the same content, by the way, in each. Excuse me. I don't always post the same content on each platform. So it gives you a little bit of an incentive, maybe, to look for me in the other places. But where am I most active? It's definitely LinkedIn and Instagram. Um, Facebook, I'm not so active on my business page, but you could find me there on my personal page. If you do send me an invitation to my personal page and we don't know each other, just send me a note to say you watched the show or that's how you know me. And I'll be a lot more comfortable accepting the invitation from a stranger on my personal Facebook. I'm not adverse to meeting new people because remember, every friend started out as a stranger. All right. Who is out there? Kaya, LinkedIn. She's coming to us. She's watching on LinkedIn in New York. Thank you very much, Kaya. I really appreciate you taking the time. Alana Kaya, thank you so much. Oh, that's my daughter's name. My daughter's middle name is Kaya. So I love that name. Anyway, nice to see you. Thank you very much for joining me. And we're going to talk about the market. Today's big day. A couple of you are watching. So look again, hit the thumbs up, pound the, smash the like button. Let me know you're out there. I'll see your name as well. And it's always more fun that way. Let's just go to the really big story of the day, okay? Let's just cut to the chase. Let me get rid of the emoji, the banners over there. Over there. Come on, where are you, banners? It's better. Okay, yeah, here we go. All right, so Apple, good quarter, guys. Really crushing it on iPhone sales in spite of um, tough to find parts and scarcity of parts and inflation. Apple crushes it. They beat on the top line. They beat on the bottom line. Uh, Services were not quite as good as people expected, but I think that was built in. You could see on the headline up here, Apple posts big beat. You see that coming across the screen there. 9% revenue pop authorizes another $90 billion buyback. I mean, $90 billion. I mean, that's more than like what 90% of the companies on the S&P 500, and they're just going to spend that on a buyback. It really is remarkable. So, and its stock is a good touch off its all-time high. So, some room to go in the aftermarket. Stock up 366. Amazon, a freaking disaster. Completely opposite. Stock is down almost 10%. We'll see. Sometimes we see a stock get pounded really hard, like we saw Alphabet yesterday / Google get pounded 2 days ago rather, and the stock wound up not doing so badly. But right now, Amazon is down about $270 a share after market trading. So what hurts? Does Amazon hurt the market more than Apple helps the market tomorrow? We'll see. But these two pretty much, I would say the 9% drop on Amazon is more significant than the 2% gain in Apple. They're both big companies. They're both first and second biggest companies in the world, right? Intel down $2. They beat, by the way, on the top and bottom line. It's their forecast isn't so hot, and that's the problem with this quarter. It's not that the quarter is so bad, which is pulling the market down. The quarter it's a tough quarter for earnings announcements because of the expectations. Companies have pretty limited visibility into the next 1 or 2 quarters because of scarcity, supply constraints, supply chain constraints as well, materials constraints, the war in Ukraine, etc. So it's really hard for companies to come out and say this is how we're going to do. And I think the guidance, because of that, will be somewhat conservative, and that's really the biggest pain point this earnings season. And it's almost like an insult to include this, but I just did it for for shits and giggles. Okay. Robinhood stock is down 8.5% after market trading, hit a new 52-week low today, down to like $9. It was at $85 at one time. That is just insane how bad Robinhood is doing. I think Robinhood they caught the perfect time to go public. It was okay. Then the pandemic came around, people got stimulus money, novice investors were trading like crazy in Apple, small accounts, but people getting to the market. Apple's I almost said subscribership count, but their client count went up. The stock took off up to 85. It's where people bought and sold memes. Apple's Robinhood became a meme stock itself and plunged, and it's a total disaster. It'd have to go up like 900% for the stock to get back to its old high. How many of you bought the stock, at $10 or under? So pretty much everybody who has ever bought Robinhood, everybody is down on the stock. That's how bad it is. There's no one who's up in the stock. No one you know and no one I know who is actually up in the stock. The low on the stock is 926. It's trading at 926 right now or 925 in aftermarket trading. So this means and the stock hasn't been public for a full year, or maybe about a year, but I think it came public at 10. So therefore, there's no one in existence that is up in Amazon stock. That is just amazing to me. All right, so that's how the earnings season wraps up. It's pretty much over after today. We had Microsoft, we had Apple, we had all the heavy hitters, and it was an okay earnings season. It wasn't great, but it wasn't as bad as feared. But it's the forecasts, the expectations that has us worried or it has analysts worried. I'm not particularly worried about it. I had lunch today with a very good friend of mine, my friend Mark, and I were talking about the market. And I'm like, you know, I've been doing this for too long to be affected by it. 32 years, market goes up 1,000 points, down 1,000 points. To me, it's just interesting, up or down. It's just interesting. I know I'm doing well. We talked about this in the past, but I know I'm doing well for myself and my clients because we're investing properly based on people's time horizons, risk tolerances, that sort of thing. Cash set aside for near term expenses, dollar cost averaging, reinvesting, diversification. That's how I know I'm doing well because I'm following my process. As long as I'm following my process, doing that well, I'm okay. Diversification is a strategy that we use to mitigate risk, but it doesn't necessarily protect your portfolio from going down in a generally down market. Did you know that? I hope you knew that. Okay. We got somebody else out there. We had Chaya in New York. And now we have James in Melbourne, Australia. Hey, James, thank you so much for stopping by. Yes, scary stuff on Robinhood. Look, how many times have I said? How many times have I told you? I don't mean to sound like that, but it's a pretty bold thing to say. If you have an account with Robinhood, I believe that you are in an abusive relationship. The company makes money by abusing clients, by getting clients to do what they shouldn't do, which is overtrade, and by making money on their payment for order flow. And I think it's, not healthy. And I think that's the biggest reason why Robinhood is down so much. It's just not a great opportunity when you're not doing great for your clients and you're not serving their best interest. Okay, let's take it to the big board. All right. So the Dow up 600 some odd points doesn't come close to making up for the down week so far. Certainly not for the down month of April. The last trading day of this month is tomorrow. NASDAQ up 3%. That is a pretty big day. Look, a couple days ago, the NASDAQ was down almost 4%. So the fact that it's up 3% today, it's a good day. I'm not knocking it, but it doesn't get us to anywhere except for maybe where we were a few days ago. S&P up 100, not bad. Gold up a little bit, still under 1900. Oil moving up a little bit. We'll see. The whole thing about oil right now is the lockdowns in China. If the lockdowns in China continue, that curbs demand for oil. And it's the 10-year yield up a little bit at 2.83%. And the VIX, let's look at the VIX, down under 30, barely under 30, 29.99. But the VIX is down 5%. VIX under 30 is a good sign. I think if it stays under 30, we could get a little bit of short-term bounce in the market. But you really need to see the VIX under 20 for a real tried and true rally. So I look at that pretty closely. Let's take a look at bond yields. Okay. So yields were mostly up except for the two ultra short-term yields, 1 month and 3 month treasuries. This is all treasury securities I'm looking at, by the way. But 283 on the 10-year, 262 on the 2-year. So still about a 20 some odd basis point difference, holding steady. When the 10-year is higher than the 2-year, we have a positively sloped yield curve. And when the 10-year is below the 2-year, we have an inverted yield curve. We did have an inverted yield curve about a month ago for a couple of days, but that's all it was. I don't really read into that too much. Crypto, still under 40,000, but not by much. Bitcoin up $1,100, 1156. It's funny. People talk about Bitcoin and the future of money and as the future of money, and how the dollar is getting destroyed. In the meantime, the dollar is like the strongest it's ever been against all competing currencies ever, like just ever right now. And when you talk about Bitcoin, we talk about it in dollars. Bitcoin is not priced in Bitcoin, folks. Bitcoin is priced in dollars. When you ask anyone, hey, how much is a Bitcoin now? Well, if you quote Bitcoin in terms of Bitcoin, and you ask someone how much is a Bitcoin worth, a Bitcoin is worth one Bitcoin. One Bitcoin is worth one Bitcoin, but we still price it in U.S. dollars. So Bitcoin is worth $39,929.37. It's just kind of weird how everybody who knocks the dollar likes Bitcoin, or not, knocks the dollar as a currency, but it's Bitcoin's priced in dollars. Can you figure that out for me? Okay, let's just take a couple of, let's take a gander. These are the industrials. Industrials actually had a pretty good day. Like, I think everything had a good day today, but let's look at how the major sectors of the market did today. We are flying through this today. All right. So technology led the way up 4%. These are the exchange traded funds that represent the major parts, the 11 sectors of the economy as per McGraw-Hill S&P 500. S&P. But the S&P 500 is an index, and you cannot invest directly into an index, but you could invest into a security that tracks or mimics an index. There's one for you. Okay. Bada boom. So we're talking here, looking at camera number 2. Just got to get camera number 3 in. Got my coffee over here. This is my switcher. I'm back. Hey, I was at the LinkedIn headquarters on Tuesday, and they took us into one of their, they took us into some of their studio rooms, like the room that I was in. They had recently had Bill Gates in, and so it's a pretty impressive studio, right? And I'm looking around of what the equipment they have, because I'm a total geek nerd, and this is what they're using. You see the switch, this black box with the lights over here? This is an A10 Mini by a company called Blackmagic, and it was the key to their whole streaming there at LinkedIn. Is this device that I've been using now for like 2 years. I beat him to the punch. I feel like feel proud of that, And I told the people there about mics. Everyone contributed to it, by the way. And I said, I love this mic. This is the Shure MV7 mic. It's a great mic for podcasting, live streams, and helps give your voice that buttery smooth podcast voice. Yes. Maybe I could add some. How's that? Is that good? Do I get a little echo in here? No? All right, never mind. Just trying to put some reverb in it, but we'll skip the reverb. Okay, anyway. So let's get back to what the heck we're talking about. Oh yeah. So technology, but everything was up. The bottom of the pack was utilities, but even utilities were up 1%. Just such a strong rally. But if you see how like financials have really come off, you see the red. There's a green and red line on each one. The red, the triangle is, and the line right here that separates the red and the green is where the stock closed. And the red is how far it's down from its high. The green is how far it's up from its low. And it's really amazing, besides consumer staples and energy, how bad a lot of sectors got hit. All the sectors. So it's been a really tough market. I think that the surprising thing is how well the market's held up. James, thank you for the heart, by the way. Guys, when you're watching this, give me a thumbs up or something, a heart, even a sad face, a smiley face, words of wisdom, whatever in the comments, questions in the comments. It would be good to hear from you, and helps the show grow. It helps us spread the good word about what we're talking about here. And so those are the good things. So what else could we talk about? It was just a very good day. Let's talk about risk. This is something I really wanted to talk to you guys about yesterday. So this is the main. We'll call this the main topic of the day: risk. Okay. Risk. Okay, let me get to camera 2. What I mean by risk is there is a different set of risks for investors who use individual stocks as opposed to investors who use funds, exchange traded funds, and or mutual funds. Okay. The risk is that when you have a stock, let's say it's Teladoc. Did you see the latest disaster du jour? Because pretty much all of these pandemic stocks, the ones I talk about every day, like the DoorDashes, the Zooms, the Pelotons, these stocks have completely given up that massive rally from the pandemic, which is just mind blowing. So let's take a look at this. Here's Teladoc. The top line here down 10 cents, down 0.3%. That's aftermarket. But during the regular session, Teladoc was down 40 freaking %. in the regular session. 33 on the close, down from 189. And was it higher than that? Yes. At the peak of the pandemic, okay, in early 2021, which is when all these stocks peaked, this was almost $300 a share. So Teladoc, from its high to now, 300 to 33. The stock has lost almost 90% of its value in the last year and 3 months, year and 2 months, which is just absolutely mind-boggling. It was mind-boggling that it went up so much, but people got caught up in the hype. And this is what happens when these companies traded up on a unique set of circumstances. And when that unique set of circumstances, like the pandemic, goes away, it takes away the impetus for these stocks to trade where they were. So that's the risk of individual stocks, is that when an individual stock gets crushed like this, what are the odds that Teladoc goes from 30 back to 150 or 200, forget 300. But an index that gets crushed, or an index fund, or an ETF, mutual fund, etc., they typically recover. I have yet to see one that doesn't recover. I think there was one fund or two funds I saw in my entire career that didn't recover. The Monument Fund and the Munder Net Fund never reclaimed their old highs that they hit in the year 2000. But other than those, in almost every case, the funds recover, but individual stocks don't always recover. And that's the big risk when it comes to investing in individual stocks, that when these get hit 90% like this one or a Peloton, it's the odds of recovering are really low, in my opinion. But if you're investing in an ETF, an exchange traded fund that mimics an index, for example, the odds of recovering in that are really high. In fact, I have yet to see an index that hasn't recovered to its all-time previous high in the next cycle. But stocks, I can't say that about stocks. James asks, what do you think the future is for Zoom, Peloton, et cetera, et cetera? I think just like what we've been talking about, I think as far as the stocks go, I think what gave these stocks their greatness, which sent them up like a rocket ship, was the conditions of the pandemic. We had to stay from home, work from home. These companies, for the most part, if they are profitable, they're barely profitable. Peloton, demand for Peloton bikes after the pandemic was so bad that Peloton, for like 2 months, had to stop. They had to literally halt manufacturing of their bikes. That's how bad demand was. So it's if there's no demand, why are they even in business? So I don't think it's I generally speaking, I don't want to say specific stocks of what could go up or down, like I'm making a recommendation or not, or a short recommendation, whatever, for compliance reasons. But I do want to say that if you see a stock that's gone down like 70, 80, or 90%, the odds of you seeing that stock go back up to their old high is just, in my book, it's non-existent. It's not even worth waiting for. It's ill-advised. That's my opinion on those. And you're very welcome. All right, I'm going to get going. Got a couple of things to do. The weekend's coming up, so I hope you all have a terrific weekend. I typically don't stream on Fridays. I did last Friday because the Dow was down almost 1,000 points. So if something crazy happens in the market, I will jump on the live stream. And I hope you guys all have a good weekend. If you think of any questions that you thought of after the live stream, please hit me up in the comments. If you're watching this in the replay, thank you for joining me, and I'll speak to you soon. Bye.